Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube in the Bookmap Discord Trade Lab? Thank you, Marty. And how we doing in YouTube? Thank you, Sniper. All right. Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing timeframe. The stream's based on structured trades that are available to everyone at no cost in the Bookmap Discord Trade Lab community, as well as the community itself, which is a group of like-minded traders that have come together to leverage their collective experience. We've all walked in the same shoes. We've all gone down somewhat similar, maybe and even divergent paths, but we always end up in the same place. And the thing about it is, why do we end up in the same place, and why do most retail traders not have sustainability in the business? Have you ever asked yourself the question? Well, maybe you can get some of those answers in Trader Lab, and that's available to all of you. It is something that I think is rather unique, and it doesn't matter how long you've been trading, whether you're newer in the business or you're an old dog. We've all done the same things in one sense or the other. So it isn't really about the Holy Grail or finding the secret sauce. It doesn't exist. So if you're looking for the only one thing you need and all that, or the guru or somebody that can share with you something that nobody else knows, I'm going to suggest maybe you don't put your energy over there because it probably doesn't exist. I'm not going to say it doesn't exist because anything can exist. But based on just about everybody else who's walked in your shoes, it doesn't exist. So the next thing we tend to do because of our psychology and primal wiring is to look for certainty and confirmation. What would happen if that doesn't exist? If that might be the case, that there is none of that in this environment, then we need to solve for something else. And that's what the Trader Lab is all about, helping you understand the business of trading, not the fantasy, helping you understand the psychology and how that can be a major impediment to your potential sustainability. And also understand that if you can quantify and qualify conditions where you might get alignment at times with the current condition or developing condition of the market, that you might be able to extract a statistical edge. And if you have a statistical edge and the ability to execute with discipline, just like the casinos do over time, you might extract the dollars from the other participants. And you will pay the other participants just like the casinos do. Think about it. Is that the business you're in, or are you trying to make it something to fit your needs versus you adjusting to the business you're in? It's an interesting question. If you're interested in the answer, then take advantage of the Trader Lab while it's available. There's no cost, and there is a link in the bottom of YouTube. And of course, like they always say, past performance is never indicative of future results. You have to do the work, and you have to manage yourself and look at this as a business. And building out a process or a proof of concept template that is statistically based, not based on your emotional needs or your fantasy. If that resonates with you, use the link in the bottom of YouTube. Don't miss the opportunity to come to Trader Lab and maybe develop a deeper understanding of the business you're attempting to be in. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please grab a pen and paper. I'm going to give you a couple of notes. And since the U.S. markets were closed yesterday, it kind of sets a few things up that are a little different than we typically see. So we're going to talk for a moment about that. Grab your pen and paper because I will be giving you statistics, but I want us to take a look at yesterday's partial session. So what we had really was a partial RTH session that closed at 12 noon Central Time. Now, the first thing I want to show you is Wednesday's RTH, up to Wednesday's RTH session. Now, it's pretty important to understand the condition of the market, wouldn't you say? Let's take a look at this. Now, these are called microcomposites. And what a microcomposite is just taking all the volume in a swing. And if you think, and the volume profile is a mechanism that helps us measure sentiment or perception and valuation by the participants. And the thing about valuation is the market's purpose is to find what's too high and what is too low and what's fair. And it's no different than shopping. So, guys, if you've ever gone to the supermarket or, let's say, tried to buy a car or went to buy a car, you know there's a price you perceive as too high that you won't pay. And then there's a price that might be on sale that you're going to gobble up. And then there's a retail price. Most of us, I don't know about you, I go to the store, I want to buy on sale. I don't know what it is. I feel pretty good about it. But if the price is really high, I'm going to have price resistance. And maybe I will go someplace else if it's worth it to me to leave that store. If the price gets too high, you'll see the volume dries up. So prices are not created equal. And many of us who use derivative indicators that measure price or derivative of price are not getting the full picture. Because just because a price point is up here, just like that $7 can of tuna in your store, if you were desperate for tuna, for the casserole tonight, I'm not saying anybody would pay $7, but let's say it's $2. Well, maybe you can buy tuna, for $1 someplace else, but you might pay $2. But there isn't a line out the door for $2 tuna, okay? And maybe the price of tuna is really $1. So the market will rotate. But if the tuna sellers want to move out inventory, they may put the price on sale to entice the buyers. And if the buyers come from, and they're passive, they're not aggressive until the price gets desirable. And then if the inventory of the sellers is consumed, then that inventory, as it's consumed, the buyers are going to start paying a higher price, and it brings it back to a fair price. And that's what creates our rotations. So shopping works the same way, except it's a slow process. In the store, prices don't change that quickly. But in our business, it's changing all the time. And to add a little more excitement to your life, it changes in what we call fractals or time frames. So within a 5-minute rotation, the shoppers are present. In a 4-second rotation or 2-second rotation, the buyers and sellers are interacting there. They're interacting everywhere. And as we go down in time frame, as you think of it, the same behavior takes place. So if we're day traders, we're attempting to get aligned in these fractals or rotations. And the thing about fractals, so you understand, is it's a vertical integration, like Matryoshka dolls. They're inside each other. So the little Matryoshka doll might be your microstructure, and the large Matryoshka doll might be all of this, okay? And the retail price is here. And let's make a note of it. It's around 59.69 half. In this auction, too low, too high, that's the high volume. I'm not paying that too high. Oh, it's on sale. Retail. Now, if I carve this up and go down to the next Matryoshka doll, and I'm trading actually in here, I'm slicing it down to see this swing low to swing high. And then inside of this, these are RTH candles, high, low. And the yellow lines are the retail price for each individual RTH. I'm going down in time frame. And the swing low to swing high in this consolidation, this is the way I see it, the retail price is 67.25. Okay? You'll notice on these days, 67.25, 67.25, 67 support, right? Now we gap lower. What do we find here? Support at the in fractal now, down here. Oh, it's too low. You can't buy it at this price. You go down the street to your favorite supermarket where you could buy it here, and now you can't. Oh, we can't get it there. Where do we come back? Well, let's come back to this one. Oh, it's too high? Well, let's come back to that one. Oh, it's too low? Do you see what I'm saying? Can you see it? So now I'm going to take you into yesterday. Now, this is not, in my mind, the way I operate, a true auction because it was cut off. But let's look at what happened yesterday. And yesterday, remember, our RTH session was abbreviated. Stocks were not necessarily trading in the cash market. Nothing was going on. It was just futures. Well, not a true auction. But notice where it comes. 69.5. The retail price for this total consolidation. Is everybody tracking so far? Give me a yes, give me a no, give me what are you talking about, and ask a question. And if you're visiting in YouTube, thanks for stopping by the lab today. Remember, you guys have an open invitation. There's a link in the bottom of YouTube if you want to visit Trader Lab on your journey. You might take something away that may change the path you take in this business. And again, you have to vet everything. Are you guys with me? How are we doing in YouTube? All right. Is everybody with me on the higher time frame, the intermediate time frame? The beauty of the auction is it's always happening. And the beauty of the auction is if you can understand market mechanics, there's no indicators here. This is a language. And most of us start out, of course, with Google Translate, or let's call it what it is, an indicator, a translator. It's translating market behavior, and indicators have winning trades. It's a wonderful thing. But there's a little bit of a problem with this. Anything has winning trades. If it doesn't have an edge, you're going to lose, and you're going to put yourself out of business. And most of us go on the quest. I think of it as like looking for the Holy Grail. They're still looking for that, aren't they? Well, that's like looking for the Holy Grail of trading. What would happen if there is no Holy Grail? Think about it. So, too low. We found too low yesterday. Now, we're in a geopolitical event, as you guys know. We know there's a conflict going on between Israel and Iran, and we know, according to what we hear, news reports, that President Trump has authorized strikes on Iran, and that can, as we know, be problematic on a lot of levels. The market is not up on this idea. So now there's conflicting reports. We have, the strike's authorized. It's the end of the planet. Now we have, no, we're going to talk about it, maybe not. And this is creating huge volatility, in my opinion, news-based and geopolitical risk, which you guys already know about. So as they say, act accordingly. Now, what do we do about all this? How do we operate in this thing? Let's get into that. This is starting at the RTH open. And I was going to give you statistics, write these down. We are opening, and this is based on Wednesday's close. I have to remember what day of the week it is. I'll tell you, I missed one day of trading. If I don't have a calendar, I don't even know what day it is. I'm not saying that's a deficiency on my part. It's just that when you've been trading as long, you know where Monday is and you trade the Friday. What is this, skipping a day of the week? What are you talking about? So we are opening higher inside of Wednesday's range. That's Wednesday's high. I'm going to give you some things. Settlement. And yes, Wednesday's low. And this is today's ETH volume point of control. Let me see if there's anything else in here that is interesting for us. ETH low. Oh, yeah, there is a one here. And ETH high. Okay? Value area high and something called value area low. Value area low, value area high, so you know what they are. It's where 70% of the volume took place. This is considered the fair area. Also on Wednesday, the naked volume point of control. And these are and this is all available in the glossary in Trader Lab if your brain is starting to go around like in a Cuisinart. This is like the retail price, highest volume. Remember, I showed you those yellow lines. Fair price. Okay, Wednesday. Fair price. Value area is this yellow box. So we know this is where most of the volume took place, and we know this is the retail price. We closed on the low, into the planet, and then yesterday here. And this does not count for today, except I'm aware of it, but this was a key piece. If this is too low, the potential is to come back here and there and wherever. Okay? Just want you to see how these pieces fit together. And yes, it's a puzzle. It's a vertically integrated puzzle that's constantly changing, and it will make you crazy. Now here, we're opening higher inside of Wednesday's range. Write these down, and you have to vet these for yourself. There is a 98% probability-ish that we take out either the first hour's high or low. That's called the initial balance. There is a 97% probability we take out either the ETH high or low. There's an 89% probability we take out either the previous value area high or low. An 82% probability we take out either the previous high or low. An 81%-ish probability you take out the overnight volume point of control, which I lost. Where is it? Whoops. Oh, there it is. Okay. 81% probability. And of course, yesterday's high or low, 82% probability. And let me give you a couple more. Previous value area high, 72% probability there. ETH high on its own now, 76% probability. That's enough. Okay? Is everybody with me? This is before the RTH open. Yeah, Willers, not so much. Okay, let's continue. So, RTH open. If you have questions, post them. I'll do my best. There's a bit of a lag in YouTube. If you have questions in YouTube and I can't get to them, use the link in the bottom there. Come over to Trader Lab. There's no cost, and I can certainly address it. And so can the team and the group in Trader Lab are a very excellent group of traders. It's a professional environment. It's not romper room. If you guys have kind of made the circuit of gurus and influencers, I hope you understand what you're getting. And I'm not saying Trader Lab is a solution for you. Many traders come into this business and it's a video game. They're not interested in sustainability. They're just passing through. If your goal is a business and sustainability, I'm going to suggest you might want to consider what makes Trader Lab different and how can you potentially change your outcome if you don't have an edge. If you have an edge, keep on trucking, as they say, and you're a profitable trader. If you're having random winners and you're not a profitable trader in spite of the winners, you may not understand what the issue is. I invite you to Trader Lab. We've all been there, so it's not unique. It's just random. RTH open. So we have a high probability of here, 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 and here. And for me, the way I'm looking at this is the market is short. There's discussion, and we hit that target below, even though it's not quite official. It's something to think about, which I already showed you. My statistics suggest if the market is short and I have buy stops over yesterday's high, my first trades are going to be longs. So that is my first trade. So I'm going to show you the trade, and this is advanced. Now, I want to caution everybody, and I know here's the other part. You're going to hear me, and you're going to ignore me. Why? FOMO. How about that? FOMO comes in many different disguises. FOMO is the urge and the need to push the button and play a video game, and maybe with random winners, get the joy and the ego gratification of a winning trade. So what many retail traders do, because they lack discipline, is not understand what separates those who have longevity and sustainability from those who don't. Discipline starts the moment you open the door to this business. And because we don't know what we're doing, we build habits without discipline. Because we really have no clue. And we don't even know what we don't know. That's the other part about this. You don't know what you don't know. But I can give you some ideas. When you see anyone show you a trade, there is no such thing as plug and play. If it was that easy, we'd all have done it. We'd all be sitting in our Barca lounger, and we'd all have ATMs in the basement. So everybody who's walked in your shoes has done the same thing. I've done it, and everybody else has done it because we don't know any better. The reason you're visiting the Trader Lab today is because maybe you want to do something different. Maybe you want to understand why other traders fail, and maybe you don't want to go the route they go. And again, maybe you do. Not intentionally to fail, but not to differentiate your behavior from other retail traders who have a high failure rate. You really need to embrace and try to figure out why. And if you're not a profitable trader, you may not really know why, but the idea is, are you going to keep doing it? Let's look at these trades. Now, I always say in Trader Lab, this is not a trade any new developing trader ought to take. There's a whole bunch of structured trades. There's 60 PDFs of these things. And you need to do is reverse engineer them and vet them and create a statistical probability that is tangible. If you don't have a statistic, then you're hanging out with the gamblers. And I always say, be sure to get the cocktails and the ticket to the buffet, because that's where you are. You're sitting with the gamblers. This is called RTH Open, right? Statistics you've got. So I'm looking for a short squeeze. Why? I'm in the range. I'm in value, which means a fair price. And I've got the ETH high, and I've got value and yesterday's high. I'm going for this because shorts are in the market. And what might happen? They get squeezed. Remember, write this down. The market goes up to go down. And more important at the moment, the market goes down to go up. And of course, we have a geopolitical event, and as Dirty Harry used to say, do you feel lucky? Well, there you go. Well, luck is a good part of this too. But luck is really the result of statistical probabilities. Gamblers get lucky. The house is not dependent on luck. The house or the casino is dependent on statistics. So if you are looking for luck to create a business, luck is not part of the business. Luck is random. Statistics are random distributions, but with an edge, the dollars will flow across the table if you've done the work, and it'll come towards you in a random distribution of outcomes. The gamblers have a random distribution of outcomes also, but without an edge, they're depending on luck. Do you want to be lucky, or do you want to be in the business? I hope you see the differential. First trade. So RTH open, no clue. Liquidity comes in the book. Now, what I'm going to do here is I'm going to go down in fractal or time frame. Just to reiterate, I don't use time. The interaction of participants is not clock-based. It's actually buyer-seller-based, passive side, initiative side. And you always have an initiator and a passive, okay? So there's always two sides, buyers and sellers. So these are sellers, and now are they going to sell? No clue. Not our job. So the liquidity comes in the book, which is somebody advertising to sell. Now, the market never has to go there. It can also skew the book. Not important. You can learn all about this in the Bookmap Discord server. There's all kinds of streamers and specific education on order flow using a high tier tool like Bookmap. I'll show you how to use it here, but there's other things you can do with it. I'm a minimalist, so I just strip things out in everything I do. So it's very, let's say, casinos, when they play their games, they don't have random inputs, okay? I did a webinar on this a couple of years ago, and it's a primer webinar. It's got about 32,000 views, and it's really about the business. It's about understanding anchored inputs versus throwing the spaghetti against the wall and see what sticks. Random inputs in a random environment is what we used to say in computer world, garbage in, garbage out. If you have anchored inputs, now you're acting like a casino and only trading when you have an edge. So sellers are here, opening swing high. Let's watch. So I get my sellers. Now this is very nuanced. This is advanced. And as much as I always say this to developing traders, this is not a trade for developing traders. This is about as advanced as this can be because there's no structure. I'm trading off of where I'm opening. I'm trading off of who is on the hook. And I'm using other elements, but I'm really blowing in the wind here. Wasn't that Bob Dylan, blowing in the wind? So too high, too high. This is called VPOC migration, extremely advanced concept. And many traders are going to trade this because they don't understand FOMO. And if you are trading this without it being profitable with the other trades I've shared, I don't want to disappoint you, but you've already made a choice, and it's not a good one for sustainability. So what I see happen here is as this yellow line, remember what the yellow line is, it's volume. If the shoppers, these guys, are saying this is too high, and this is called microstructure, this is very advanced, because this can change on a dime. And what do I know? If I get sellers here, what's happening here? Buy stops are going to be above here. And what else do I know? Buy stops above yesterday's high. Okay? So, and I have over 90% probability, and you have to bet this, remember, to take out either the ETH high or low. So I've got my sellers, and I'm looking for a long first trade. Let's see. And right here, I'm going, maybe not. Right? You guys ever do that? I don't know. Back here. Well, this is reversion. Now, I don't have anything here because I'm in the clueless zone. I have no location. I have nothing. I'm just going, I don't know. What do I know? I don't know. I know, where's my opening swing? Probably right. Somewhere right around here. Give or take a hair. Okay? So we're going to remember that. And why would that be important, you say? Number one, in the higher time frame, or Wednesday's time frame, there's buy stops above that high. I'm inside of that range. I'm inside of value, and I'm not too far from the ETH high, and it appears I might squeeze. My goal is to get long, and I don't have a clue yet if I'm even going to get a long. And if it doesn't show up, I just go, that's lovely. Opening swing high. Come across the range. Now notice what I did here. I took the stops out. I came across the range. So this is two-sided trade, okay? I'm in 1 minute. This is why this can be a very dangerous place to trade. Let's look. Two-sided trade. I'm anticipating two-sided trade. And there's a context sheet I've shared in the Trader Lab that would tell you this. Markets is fair. If it's a fair price, you're going to get two sides. And subject to your plan. Now, this is advanced. This is not a trade anybody ought to take, but this right here is a potential, but this is your resistance. So it's not a trade. It's just something that's more advanced, okay? Just telling you. Now, let's watch. What's happening here is the sellers are there, right there. How do I know that? Icebergs, resting liquidity. Now, what about here? Icebergs were there. We got above it. I pull back. Nada. I come up here. And again, I have no way to know what's too high, what's too low. Clueless, but not ignorant. Iceberg is sitting here. Here, let me pull this down. I think. Yeah. This guy executes here. In other words, whoever was selling here hung this out, and we could see it in Bookmap. Stop an ice. So I know there's an iceberg sitting right there, and it executes. This green bubble is by delta, so that's the aggressors. And the aggressors are made up of market orders and stops, which become market orders, and that's measured as delta. Well, when you have buy delta and it doesn't go up, why? Because the sellers are taking the other side of the stops, and then I break. Now, I don't know that until hindsight, but what do I know over here? Same thing. So when I come back here, because I had my sellers, and I know this guy's hanging out in the wind, I don't know what'll happen, but when I see this, I go, well, wow, now I know there's a seller still there. Okay. And where's my buyers? They were here. There's the buy iceberg. You see the other side. So you get to see both sides of this. Something is not right here. Hold on a second, guys. This Bookmap, I'm on different computers, different feeds. I'd have to check something. Hold on. Because there was a long here. I want to make sure. Just let me go back. I'm on my my workstation now, my actual trading thing. Let me see where it was. Oh, mistake. Missed it. 834. Yeah, it's here. Okay. Right here. So I have this outside edge, and I'm looking to squeeze these shorts out. So at 834, right here, this is too low. Stops are under here. I get the chop, the break, and the break high here. When I cross over this and I hold this, this becomes a long. And then I am going for the ETH high, yesterday's high. Take out the stops, okay? Value area high, because the statistics favor that. I was wondering where the heck that was. So that was the long. And the way this would work is if you took the long, and this is the key piece here. We had the buyers here and the absorption, okay? And I come down again. Now, I don't have a trade here yet. And I see the sellers and I see my icebergs. So I see the sell delta, which is the sell stops and the absorption. And I still don't have anything, except now the teeth are chattering. And as soon as I come above here, now I'm ready because I've tested this. I've got my buyers and I break high. Then I know here that I have my statistics. So this is just the first long. And as far as I'm concerned, the way I work, and I'm not saying this is a good idea. It's just, something you guys, it's up to you. Everything is random in this. Write that down, by the way. It's random. We don't have to do anything. And there's another thing here I'm going to show you in a higher time frame, just to keep you crazy. 67.25 is the retail price for this whole consolidation. It's right there. So here you see how it was support. Now, no precision. That support there. This was resistance on this day. Who knew? And then resistance on Wednesday. So if I know this is resistance and I know there's stops there. So I'm saying is the plan for today was to squeeze these guys because we want to get the shorts out to go down. Market goes down to go up. Market goes up to go down. And of course, maybe not. So long scale target. Now, I was talking to one of our traders this morning. We were discussing this trade. And you see this resting liquidity? What do I know about this? Well, I know there's sellers here, and I know we might interact. And I don't know anything else. I have a high probability target, ETH high. Either taking out the ETH high or low is about almost 98%. And specifically getting to the ETH high on its own is around 76%. Might you go for this target? I asked this astute community of traders. Yes. Might you exit right here ahead of the liquidity? Why? We anticipate sellers. Might you exit there? Maybe. What's your plan? For me, this is good enough. And then if I have a runner, I'm going. If not, the trade is done. That's my trade. If I'm running a 2-lot and I'm sticking to it. Because if it goes to the moon, I have other ways and other structured trades to get in. And I have a couple of things. I'm not going to, I don't know if it's worth talking about them, but you're going to see them from the other side. So if I come out here and exhaust, then I'm going to revert back in. So shorts. If I come out here and it's the squeezeteria and pieces breaking out again, I'm going to be getting long to continue the squeeze. Stops are here, stops are there, right? And this would be a potential target if we're going to do the squeeze. What happens though if we don't? Then it's turn the barge around and go the other way. And there's no way to know. Is everybody with me so far? This is called structured trading. There's no holy grail. How we doing in YouTube? You guys following? Post questions, and if I can't get to them, come over to the Bookmap Discord Trader Lab community. There's a link down there. There's no cost for it, but you do need to verify your email, your Discord email, so you can get a code which confirms that you're a real person. That keeps, as we say, the riffraff out. And I think you might like being in a place where there's minimum nonsense going on. Again, this is not romper room. It's really about business. So this is business. And this is like being on a virtual trade desk. And if you're sitting on a trade desk with me, it is no nonsense. And I'm not saying, if you want to have fun, this is really more about business. And it's fun, too. We have a great time in Trader Lab. Mutual support, a lot of research, data mining. Trader Lab is an advanced process, but not complicated. We tend to think that trading is a complicated business. It's not complicated at all. Let's substitute what it really is. It's random. So we perceive randomness as complexity. It's actually not complex. It's just random. So change your thinking, because then you're going to change the solution. So right here, resistance, and it's like Pac-Man. Do the buyers consume the sellers, or do the sellers, the icebergs, consume the buyers? And we don't know the answer. Now here, I see a counter rotation. There's my sellers. It's these guys, most likely. And their limit. So we're going to see the limits. But now I got sellers below these guys. What does that say potentially? Too high. I get my sellers. I'm now below my buyers. This is a potential trigger setting up here. Pull back, up. Now I have a sweep here that it puts me on alert to a counter rotation. I come up, I tag this, I tweak this thing right here, and my sellers are still here. See them? And now I get a sweep here, and then I break low. This trade, if you're holding runners, is now, as they say, time to exit stage left. If we counter rotate, then we are now reverting to the mean. So I don't have a short here. I have I'll see you later. Now, at the moment, I'm still thinking that this, because of the probabilities, remember, taking out the previous higher low is almost 83% probability. Again, you have to vet this. I'm still on this. Getting to the value area high is 72%. I'm still in a long mode. Okay? Now, I'm looking for longs. Let's look. So now, here's what I know. My opening swing low is out here, and I took out my opening swing high and got my paper out. I have not gotten here, so statistically, I'm still leaning here. I'm not thrilled about this, but how can you be thrilled in a random environment? The emotional side of me is going, what's going on? And then the answer lies in my statistics, my trade plan, because I can't know the future. What do? I take out the stops right under here, and I see absorption. My plan now is to look for longs. I'm inside the fair price, the value area. For me, it's two-sided trading, and I'm looking to come back inside towards my statistics. I want to make a point of that, because you're going to see me take a stop. And what is that? That's the real world, guys. What do I know? I had liquidity sitting here. I'm conscious, not unconscious. conscious. I had buyers here. And what else do I know? Sell stops are under the swings. Do I want to get in front of the swing? No. I want the stops to come out. Who has stops in the market? I can assure you the whales are not using little stops like we are. It's retail traders. It's risk-adverse traders. It's us, because we don't have staying power in this thing. Unless you got a really deep pocket, and a deep pocket, most of us don't have a pocket deep enough. So our thing is you got to manage risk, take your lumps, and trade with an edge. And everybody pay. The casinos are real good at this, and they pay the gamblers. I mean, cost of production and overhead. You got to think like a business here, not like it's not about being right. It's not about predicting. We could all predict. We'd all skip the trades where we pay the gamblers. I think the casinos would have figured that out too. So let's look over here. Liquidity is here. Liquidity comes back. I have picked the stops out from here at the time, and now I see my absorption. This is my area now, the stock. So the structure for this is called mean reversion. It is an outside-in configuration, and I'm looking to come across the range. So what I know is the context suggests two-sided trade. And we don't know, is it going to take out yesterday's high, take out yesterday's low? For me, yesterday's high is more likely. So, but two-sided trade. So I'm still going to take longs. But when I come across here, I know now I'm in something called potentially reversion. And that is outside in, not inside out. And this is very important. This is called context. And you got to learn context, because most of us, as we're developing, it's very much plug and play. Oh, it comes to the mid, I'm going to buy the mid. Well, if you understood context, you would not be buying the mid or the VWAP. You would understand that we are transitioning to, the potential was for two-sided. And now we have, let's think about this logically. If the first trades were long out here, so we had sellers, they become buyers, they get squeezed. The buyers become sellers. The sellers, because they're getting squeezed, become buyers. That's our primary trade. Then the buyers become sellers. And then the sellers, in a reversion environment, which is two-sided rotational trade, you would learn this in Trader Lab, is longs back to here, back to there. So we're beating everybody over the head. Shorts get squeezed, longs get squeezed. Shorts get squeezed, longs get squeezed. Shorts get, we'll see. So let's look. Support, absorption. This sets up a long. This is a long trade here, and I'm leaning against this. Let's look at the trade. So I'm looking for this. And then, and this I see come in. I don't like this. I'm going, what are you doing here? It's like, what are you doing? Because this will skew the book. And it comes in there. And my location is in here. Now, if I get long in here, my stop's got to be under here. This is support. And the problem with everything in trading is if there's stops here, which there would be, it can easily come down here. And this is something you're going to see over and over again. And you guys got to screenshot this. If the weak traders, us, who are risk adverse, you are and I am, we're wired that way. That doesn't mean you trade in response to your emotional stimulus. It means you understand the decisions you make are not necessarily based on the business. They're based on your fear, your emotional triggers. Do you know the difference? You probably don't. You will automatically put your stop here because you're saying, I don't want to lose anymore. Is that in your head? That's the lunatic under the hood. I call it Hyde, Jekyll and Hyde. Hyde's the risk adverse, this primal wiring of avoiding risk, or the saber-toothed tiger or the apex predator. It's worked really well, for survival of the species, but it's not going to help you survive here. If anything, it's going to take you out of the business. So our nature, and I'm using the term nature very intently, is to be risk adverse and want to minimize our losses. Have you ever thought that you're minimizing your opportunity, not your losses? So, and that's where vetting comes in. Because once you understand, and you need to come to Trader Lab if you don't understand these elements, then you can change your outcome. If you think, and if you're only looking at putting your stop here, when maybe your edge would go up X% by putting your stop with a better understanding of market mechanics, you may change your probabilities of success just by understanding more about your emotional stimulus, the decisions you're making, not based on this business, but based on your fear. Looking for certainty is not what this business is. Yet, that's what we want. And the reason you want it is it's not even part of your consciousness. It's primal wiring. This is support. Come down, absorption. So, and you see the icebergs? Look at that, 722 icebergs. Looks pretty good to me. What do you think? And this is where our liquidity is sitting. So more buyers are sitting over here. So what do I see? Sellers, buyers above the sellers. Here. Now, same thing here. Sellers, absorption, buyers above the sellers. This is a trigger. If I get long here, my stop's here. If I get long here, my stop's under here. Same trade. And I'm trying to go there to get scaled and then come across the range. That's the trade. Stop. Okay? Everybody track it. It's very important you understand that everybody takes stops. Nobody has the quote crystal ball. We had Magic 8 Ball on the trade desk, and the problem with that was we were always concerned that somebody would grab it and throw it. Because the best that thing would say is, should I get long or short? Well, ask again. You guys ever have a Magic 8 Ball? How are we doing? Um, Boss man, the question on the NASDAQ is it's the same. The difference, all markets work the same way. All markets are an auction. This is really the fundamental way any market works. The difference between like NQ and ES is the depth and this certain idiosyncrasies. So every market on its own has to be vetted. The thing with the NQ is it's like getting on, I call it the snake because it's easy to get bit in the NQ because it's thin. You'll notice here the limit order book, there's, in the NQ, you might have 11 or nothing sitting in the queue, So if you have a stop in there for some reason, they'll call you later. I used to be a high volume NQ trader, but long time ago. And it could be a nightmare because of getting what we used to call, I don't know what it's called today, skidded, where your stop is, let's say, 65. And they call you later, and we'll call you in a week, and we'll let you know when we find your order that's laying on the floor someplace on paper. This is back in the days of the pit. Anyway, so this trade here, wherever it was, is a stop. So now, what does that tell me? Something is, as they say, rotten. And what's rotten is what happened here is the shorts got squeezed, but now these longs. And instead of us coming back across, we're breaking out. Something has changed. So now I have other trades, and I'm going to unleash them on you. Let's take a look at what they are. Now, this is an advanced concept. Again, this is one of those trades that if traders don't follow a proven development process, they will probably not stay in the business. It may sound harsh, but everybody thinks they're special. And we are not. We are human, and we are the same. We all have our, different little nuances, but most of us have FOMO, and we don't even know what FOMO is. When someone who maybe has a little more experience to you, and for me, it's going on 46 years, or it might be 46 years. I have to go take a look at the count. I think it is now. I've seen it, and I've trained traders. Coached many traders over the years. and they all have many things are similarities, and that is FOMO. And they don't even understand what FOMO is. FOMO is not doing the work, just wanting to click the mouse. It gives you a dopamine, a release of chemicals in your brain. There's more to this than you're conscious of. You are not conscious of what's going on in your brain. You're not conscious of ego, the need to be right, and you're not conscious of waiting to only interact with the other participants when you have an edge. You're sitting here and you want action. That's dopamine. You need to understand that. If you don't understand it, you're going to keep doing what doesn't work. So we know that now, if we're under here, there's trouble for the longs. I'm still inside of the range, but what has happened? I got to my first statistic. What has not happened? The stops are sitting up here. Why didn't I get there? That was easy pickings. That's because the sellers saw this is too high and they loaded up here. And look, there's 1,500 was going off right there. And they absorbed the buyers. So, c'est la guerre, fast in the what do they say? In the fast lane. Now, this is called VPOC migration, advanced concept. And I always say, and I'm going to repeat it for those who will listen, this is not where you start. If you cannot do the other trades that I'm going to be showing you, you will go out of business. And I can say that confidently because I've seen it over the years. So I know we all think we're exceptional, and I'm sure you are. I thought I was, but what I was is just like everybody else. I just didn't know it. And I also didn't know what I didn't know in trading, which was also a problem. So, and part of that had to do that when I started being an off-floor trader, initially I was going to get a seat and go down with my friends who are all floor traders. And I kind of found that I took a charting course at CME, and back then it was classical bar charting. There were no candles. There was barely indicators. It was indicators in, stochastics and oscillators were brand new. So I kind of went in that direction. I went, oh, look at this. That line crossed over. This ought to be easy. Anyway, so my learning curve was very steep because there was no information. You guys have the other problem. This is too high. If this is my retail price, and now there's more volume here, what is the message? This is the language of the market. What it's saying is everything above me, this is too high, too low. Remember the shopping experience. Too low, too high, retail. I'm not paying that. I'm leaving this store. Now, what's to support becomes resistance. I'm not paying that. Come out here. Maybe this is too low. Come back here. No, sorry, Charlie. Charlie the tuna. Break low. Too high. This is an auction. Sellers are here. Buyers are here. There's the absorption. We're either coming back here, but if this microstructure, I'm going to take you in a fractal just to help you see some ideas. What is happening here? Well, I'm thinking it's a long. Look at those buyers. To go there. Microstructure. Too low. Retail. Not so much. What happens here? Absorption is there. I don't know. Absorption is here. Buyers are here. Need to clear here. What happens over here? Sellers. I don't know that. Sellers. And I'm kind of, you cheer for the home team. Let's go. And what is this? Look carefully to the right. What is that? That is the developing daily time frame retail price, the highest volume for the day so far. And as volume and price migrate, just like in your store, think of this as a real-time pricing mechanism. That's what the auction is. This is my retail price. Well, if the price gets on sale and I cannot get back to it, then it's telling me it is mispriced. Now I come down in, quote, fractal, not time frame, and I'm chopping, and I'm looking for what? Buyers are here, support is here, too high is there, and my trade is to come here and check the retail price. Instead, I do it here. Sellers are here. Sellers are there. There's the absorption. Buyers are here. It's a fight. Buyers and sellers, buyers and sellers. Chop, 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 chop. Break low. This is trouble. This is the last place where I had my buyers. Absorption, liquidity, that guy was absorbed. If I get under here, it's ugly. I'm under there. So what happened here? That was an auction. That and that are the same. Now, I know you're getting confused. What is the same? Remember, vertical integration, Russian dolls. In the developing, I'm going as you guys think of time frames. If that's too high, I'm going down in the next fractal. I'm trying to go here. If it's still too high, now my auction is here. I'm looking for it to go too low, back to this. It breaks the other way. Too high, too high. Now I know there's big trouble. And I now have a statistic at 9 a.m. called the IB30. I also have yesterday's value area low. Let me give you a statistic. Now, statistics are only a piece of this, and in the scheme of things, they're not the highest priority. It's what's happening now. So what's happening now is too high, too high. Let's go a little further. Trouble. And the value area low only has a 55% probability. The probabilities favored the upside, you see. Well, now the participant behavior is telling me, don't worry about those statistics. We didn't get yesterday's high. What was the probability of yesterday's low? 82% probability. What does that tell me? Warning, Will Robinson. Let's turn it around. We're now going for this and 82% probability. Where is it, you ask? There. See? And who knows, right? We're all clueless. At least I am. Not ignorant, clueless. Why am I clueless? I ask myself the same question. Because I can't know what will happen. I know what might happen. And because I have a vetted trade plan and have developed the discipline to be patient and not to chase the market and try to get the dopamine fix, but I've prioritized profits over a chemical fix in my brain, because that chemical fix costs me. It doesn't pay me. So if I want the fix, I'll go to the casino and I'll get the cocktails and the ticket to the buffet, but not here. And this shifts down. What does it say? Let's follow the language. In the microstructure, this is your retail price here. Break low, sell trigger. Buyers here. Why doesn't it go up? Absorption. This could be a short, but it's not. I'm just saying it could be. Or if you're managing a trade, and let's say you were short, you know sellers are here. You know that these guys were absorbed. And when we come down here, there's your icebergs. They are absorbed. What might happen here if I get my buyers here? We can counter rotate. Now let's go up in fractal. Too high. New retail price. Follow. Break low. What does that tell me? Too high. It's getting away from me. Oh my. Tom, get in. You're missing it. Yeah, I know. Watch. And mentally, I already go, well, I don't have a trade. But let me tell you what I know. At 9:30 Central Time, I get what's called the IB stat. And you wrote this down. I know you guys do this. I just know you do it. And there's over a 98% probability, past performance not indicative of future results. If I take out the first half hour's low, I might take out the first hour's low with a 98% probability. And since I didn't get the one up top, would you say that that probability is useful? So, too high, no way in. Statistic. Now I'm looking to get short. I have a couple locations. I have this outside edge. I have this. Let's see what happens. This is my retail price. This is too high. Watch. And this is too high. And this is my outside edge. This is called, remember I'm talking about mean reversion, how I'm trying to get long to come back here, right? Well, this is the mean. If it's too high, I'm going to reject it. So instead of being rotational, I'm now directional. The context is changed. What is this, you ask? This is a short in the trader lab. This is called the variable high volume node. I made the terms up when I was doing this. Nobody else was doing it that I was aware of. I learned market profile, the actual original market profile from Peter Stottlemyre, who created it. He was over at CBOT, and I think it was in 1985, somewhere in there, 85, 86. Can't remember anymore. And he had something that he called Market Logic School. I went to school to learn the profile because at that time, nobody had ever seen anything like this before, And this is the volume profile. This is the evolution of that statistical auction-based perception of the function of the market. Now, I knew a number of these elements on my own, but I never put it together in a holistic, a full picture. I had pieces of it. So this is too high. If we're not paying that, here, too high. If I come back here and it's too high, I can sell this. And then I have my 90% probability. And there's more statistics, by the way. Remember, over 80% to get here, right? So that's where I'm trying to go. And there's more structured trades coming up, by the way. Now, this becomes resistance. Now, this is a order flow trade. It's advanced. And guys, if you just grab these things and then you get mechanical, when this happens, I'm doing this, you're not gonna have a good day, or maybe even the potential of a career. There's more to this. So what do I know? Here's what I know. Buyers are here, buyers are here. These guys. There's your iceberg. What do I know? Auction, too high. Break low. This is a trigger and a short. You would be risk neutral. Now what do I know? This becomes resistance. Again, I'm getting you advanced concepts, okay? I'm just showing you what you can learn in Trader Lab. And it is not, I have to insist, not plug and play. You can do plug and play. You've been doing it already. How's that working for you? Besides random winners, by the way. And I want you guys to understand, anybody can have a winning trade. You could have a random buy-sell button, and you wouldn't know if you're getting long or short. It's like a coin toss. Is it going to be heads or tails? Well, you'll still have winning trades, but overall, not so much. So this, let's remember, where's my short? There, you'd be risk neutral. What is this? Advanced. What is this? A continuation short. And the way it would work is, right here, you see the buyers, and now here's a micro trigger. Where does the stop have to go? Above here. And what do most retail traders do? They put it right there. Not me. Been there, done that. Not interested. Buy sweep suggests rotation down. Now, what else do I know? 930, remember that 90, whatever it was, percent probability? I take that out. This is what I'm trading for. You do remember yesterday's low. What am I trading towards? 82% probability. Can this help you? What else am I trading towards? The overnight volume point of control, almost an 82% probability. Is that making some sense? This trade could be done right here. And then we have open low at 60.17. Let me find it for you. I just want to show you method here. So what I know is, what did we do here? We went up here, not so much, out the bottom, and now I'm looking for stops here. Why? Sell stops, I should say sell stops, and clueless. Whatever it does, it does. And I use the term clueless quite generously, because if you think you know, you're now becoming myopic and your ego gets involved. I am continually reminding myself I have no idea of the outcome of any unique event, that I have an edge, and that gives me the courage to put a trade on and see what happens. It's like buying a ticket to ride. And the goal is to get risk neutral. So then it calms me psychologically, so I can now manage the trade without operating under fear. Markets rotate. So, you put a trade on, you go from euphoria to depression, I better get out, euphoria to depression. Yet, I know I have this high probability. This is my trade, and I'm okay taking a short from there, and I'm okay being short from wherever it was, structured trade. So right here are two trades, Trader Lab trades, and there's another one. It's called the IB continuation trade, short here. You'd be risk neutral, you got taken out, it comes up, it sets up another short here. If you took it, right here. Right here, you get VPOC migration. So if you took this, you would probably not get scaled and you'd take a stop. But let me show you this. This is interesting. I haven't seen any of this. So yeah, if you took this trade right here, let's look at it. Now, I haven't seen this. So if I took this trade, I would not get, if I took it, I would not get scaled. I would take a stop. But here's something else. If I was actually conscious and I was actually trading this, I would not take this short. Let's assume I did. Let me tell you why not. If the volume is shifting down here, this is my new retail price. This now is too high. I'm going to show you some more structure. Please give a like if you're visiting in YouTube, if you find this interesting. Obviously, there's a little bit more to this, right? This is an outside edge. This, I'm going to label it, it's a low volume node. Let me explain what you're seeing here. Now, you'll notice there's all these rotations or consolidations. They're all auctions. So the market's in fractals is continually checking what's too high, what's too low, what's fair. If fair becomes too low, then it's going to move away. So this is what the fractal thing is all about. So this is too low down here. That retail price is too low. Now we leave and we're doing this all over the place. And if this is too high, we'll come down. If it's not too high, we're going to go up to the next locations and so forth. The low volume node is the outside edge of all this volume, and it's up here. I'm going to label it because I know the market can come back up here, and that's called the low volume node. So I'm going to label it so I don't forget, because it's very easy to be myopic and be focused. This is the new retail price. That's too high. This is my outside edge. What might qualify in this condition is something called mean reversion. And mean reversion is outside in trading if I think the trend is down. Now, one of the things we got to be aware of, we got this low, we got this primary target, we got all the stops under here. If we run out of sellers, sell stops, then we might squeeze the shorts out. Remember, the market goes up to go down, the market goes down to go up. So I have an alert set in Investor RT, which is and you guys can probably do it depending on what other platforms you use, that's going to let me know that this is getting close to shifting. When I'm hearing that alert, I know that this might be too high. And if it shifts down here, I have to be very careful because two things can happen. And you saw this back to the left over there. You can review the stream. I can either, when this drops down, I can go this way. But if I come on this side and I can't get below it, then I'm going to squeeze. That's what I know. And I don't know what else. See the behavior. VPOC migration up. You notice, break high, teeth chatter. This is my retail price. I have to break below it. What does it do? It breaks above. I'm going to take you back to the opposite behavior. Now, this is nuanced and advanced. You really need to research this. What happened here? Let's just look at the opposite behavior. So too high, shift down, break low, test it, shift low, too high. Let's come back here. Break down, break high, test it, too low, shift high. We don't, right here, if we don't do this, we're doing this. Where do we come? Mid VWAP. Then your possibility is back here or nothing. This, we have another trade in TraderLab. Oh, yep, I didn't. Let me show you this. What do we know about here? This is resistance, right? Resistance. What was happening here? Selling icebergs. What happens here? Now, again, I'm getting a little more advanced. I've got my mid, I've got my VPOC here, and we have a trade in the TraderLab called VWAP to VPOC. And I'm leaning against this. Why? Sellers, absorption. What do I anticipate? And this comes in and this comes in. This is resistance. Where am I? See? Now, I didn't know it even got here. I'm looking at this over here. So you can see how I know my process. I do not know anything else. I can't. So my next structured trade, and this is really a sweet trade because this has a compound location. Yesterday's value area low. Okay. Mid is here. So I'm below the mid. I've fallen out of this distribution and I have now a new distribution. The distribution is telling me maybe too high. And it's an area. It's not a line in the sand. And my retail price now is here. Actually, it's here. So VWAP, the VPOC is back here. So this is a short in the TraderLab, and it's backed up by this, and the absorption. Trigger. Let me show you the trigger. You got to vet everything for yourself. Watch. Look at the location. I'm referring back to what happened over there. Look at the liquidity. This guy pulls, and I can't say for sure, drops. And I don't know. Not my job. Trigger is right here, right in alignment, right over here. No precision. Horseshoes and hand grenades. This is my trigger. My sellers are below my buyers. I have a buy sweep coming up, which suggests the potential for counter rotation. Trigger. Now let me take you into the micro. Right here, my sellers are here, my buyers are here, and my teeth are chattering. Sellers get below the buyers. That's my sell trigger. My entry can be here, right here. I have buyers in control here, buyers there, sellers there. Boom, 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 boom. Where's my micro high volume, you're asking? It's there. Too high, too low. This little node right here, this is your little VPOC. Remember, Matryoshka dolls. I'm not paying that. Yeah, but it's on sale. I'm not paying that. Yeah, but it's on sale. Retail. What happens if this price in this little market down the street from you, 8 o'clock, Saturday night, pint of ice cream for the movie. There's not a line out the door, but you'll pay whatever you got. If this price is too high and we can't do volume up here, we leave it. You get it in the car and you drive back to the supermarket. The higher volume, the higher fractal. Let me show you again. These are triggering structures. You can learn this in TraderLab. Where does it pull back? Where was it too high? Wasn't it there? Look, I'm not paying that. Yeah, well, I'm still not paying that. You're crazy. These are triggers. And where does it pull back? the retail price. Is that really too high? I'm not paying that. Where am I going? Here. I'm in a fractal. That's my scale, and then my helmet is on. And then whatever happens, happens. Let's look again. You say, really, Tom? Yes. Watch. Where do I come? There's no precision. Where am I? Right here. What is that? Variable high volume node. Now, I understand you're looking at this and you're saying, I don't think I can do that. Well, I don't use any indicators. How can I do it? Let me tell you how I do it. I do it because I understand market mechanics. And I had to wean myself off of indicators that were doing the thinking. I figured it out, unfortunately, over too many years and too much brain damage, that I did not have an edge. I had randomness. And the solution was more time frames, more indicators to get more certainty. Is that logical? Right? Is that what your belief is? I believed it, but I didn't understand the business I was in. I thought it was just more certainty, more confirmation. Well, how about that doesn't exist in this business? That's too high. New retail price, new retail price. I come back. If this is too high, what does it tell me? I can break under it. This is my target. Trade can be done. You don't have to do anything else. I also have stops under here. If I know there's stops here, I'm going for the stops. Why? Fuel. Watch. Now, where do I come? Resistance. Resistance. Retail. Now, you can always get thrown under the bus. You know how it is, right? Oh. Do you see this? Is this interesting to you? And there's the buy sweep. There's the location. Let's go a little further. So this is a short for me, not saying for you, for me. There's my sweep. There's my liquidity. There's my trigger. There's my short. And my scale is ahead of this. I mean, that's okay. Would you be okay with entering there with a stop over there, looking for this, for risk neutral, and then helmet, trade management? How we doing? Are you guys tracking? Hope you guys are getting something out of this, guys. If you're visiting in YouTube, this is the Trader Lab. You can learn this. It is not complicated. It really isn't. It is actually simple. The problem is it's random. And in Trader Lab, there's a lot of support. Our senior trader has over 50 years of trading. When he's not on the golf course, he's trading. I've got 46, both professionally and out here with you. And I have the tire tracks on my back to prove it, that I've been doing this long. I spent too many years with randomness, thinking I just had to make it better. And it's probably you're in the same boat as I was. The difference is I decided that didn't work. And I had the proof. I would have multiple winning trades, winning weeks, winning months. And I built trading systems to try to put these elements together to optimize them. I couldn't do it manually. I started out doing it manually, but then I was managing money. And when I was managing money across diverse asset classes, so I would do this process, wrote code, built systems, did back what's called walk forward testing. It was unbelievable. And in spite of it, because I thought I would solve the problem, you see, of randomness by optimization. And most of you guys are doing forms of optimization in curve fitting or tweaking, tuning, get that screwdriver out. Maybe I use a 9 EMA or a Keltner channel instead of a 20 SMA. I do this, or whatever it is, pick one. Or I throw anchored VWAPs all over the place. Sometimes they work, sometimes they don't. Who knows? The answer lies in the metrics, not in what you do. The truth is in the metrics. It doesn't lie anywhere else. The randomness is in the market. The truth is in the metrics. If you don't have the metrics, you have the randomness, you see. The metrics are what help you develop the confidence to control the emotional triggers, fight and flight. Oh, I'm going to get stopped out. Or how about this? You take a short, you're risk neutral, and you get this. Oh, I'm going to get stopped out. Raise your hand. Have you ever bailed out here only to have it continue lower and you leave 20 points on the table? Come on, I'm not going to look. Raise your hands. Is that you? How about this? It was me. If you're in YouTube, how about a like? You might not like the idea of having to do some work. I get it. There's all these gurus out there. The only indicator you need. I mean, it is absurd. And now you guys are blessed with something called influencers. And most of them have these either pay chat rooms or these little things. Oh, sign up to this, sign up to that so they can make some dough. Guys, come on. I'm not a vendor. There's no cost for this. I do it. A lot of people say, well, why do you do this? And I'm saying, well, gee, I'm not so sure. I'm a full-time trader, and I'm doing this. I'm not trading. So it actually costs me. But there's enough trades during the day that it doesn't disturb me anymore. I've been doing this, 46 years. You get kind of like, you show up, you go to work. And I love it, obviously. But also my own pain of development is probably what drives me to take pause and share because of what I went through. Nobody should go through what I went through. And a lot of that has to do, there was no information. There was no internet, there were no PCs. My first computer was an Apple IIe. And I shared an office, by the way, to give you an idea. Back in the beginning of technical analysis, we had Wells Wilder. My first, I'm trying to remember, CompuServe or no, not CompuServe. What was it called? Comtrack, ADP Comtrack. You ran an extension cord up to someplace, a phone cord for data up to Massachusetts, and it was very expensive. So you could have real time with some kind of technical analysis. It was, a moving average. We get a chart book once a week, and then you get your pencil and your ruler out and you draw your trend line. I shared an office with George Lane. He created stochastics, and that was the first time I saw oscillators. And I thought there was the Holy Grail. Well, you guys now, when you open up your toolbox, you have 150 indicators in there. And how about this? They all work. Is that a blessing, or should I say a curse? I think it's a curse to sustainability because randomness is the enemy. Now, VPOC migration, what does that tell us? Maybe too low. So what does that set up? Potentially squeeze, and then we have to see where it goes. LVN now is here. I'm running out of time. If you guys found this interesting, and there is no plug and play. If you're looking for a shortcut, this is not the place to come. I'm just going to say don't bother, because this is really, if you want to be a professional in this business, you're going to have to stop playing with the amateurs, in my opinion. Again, it's just a personal opinion, and it doesn't mean this will work for you because you actually have to kind of retrain your brain to experience this differently and get up close and personal with what is causing you to make decisions that are not on a conscious level. Once you learn about the psychology and the emotional triggers, you're going to start viewing the challenge differently. And then you're going to also look at the solution, the potential solution differently, because it's, in my opinion, the only way to manage the lunatic under the hood who wants to protect you. And it's great if you're out there with the saber-toothed tiger. It cannot differentiate. Risk is risk. And it's always monitoring your behavior, and it is operating on a subconscious reptilian level, primal level, under your intelligence or your consciousness. So you don't have control over it, it is always there. And I feel it all the time. Every time I put a trade on, I have fear. Now, what does that mean? It's not fear run the other way. It's anxiety because of randomness and uncertainty. So our nature is to look for certainty. Well, if it doesn't exist, you can't look for it. So then you got to look for something else, right? What is that? Edge. And what is edge? Taking the time to identify specific trades. I've shared 60 PDFs of them, and you reverse engineer them. You make them your own, because there's not one way to do this. I find for me, there's this thing called risk reward. My stops are pretty consistent. When I put a trade on and I take stops, we all do. It's just overhead and cost of production. Where's my resistance? Not a recommendation. Outside edge. LVN, outside edge. The best this thing might have, if it doesn't keep squeezing, is back here. But now I have VPOC migration. I could just, go back in the Barca Lounger. What does the market do? Market goes up to go down. Market goes down to go up. Market goes up to go down. Market goes down to go up. Market goes up to go down. Market goes down to go up. Market goes up to go down. VPOC migration. Market goes down to go up. Now you got to see where. And where's my other areas? Here. So no trade now, but you can monitor it. Please give a like. Hope you got something out of this today. Appreciate you stopping by Trader Lab. By the way, this is what the Trader Lab community looks like. Serious, again, a lot going on in here. A lot of contributions, data mining, research. This is an advanced trader methodology. Now, don't confuse the term advanced with complicated. It's actually rather simple, but it's random. You got randomness no matter what you do. So if you can accept randomness, then it's about consistency on your part. The market is inconsistent. It's random. But with statistical edge, you can then begin to potentially extract a profitable process. And then you need, of course, to vet it. And there is a library of webinars also. Start with this one. It's got about 32,000 or 3,000 views. It's a high-level overview. Look at this one. Stop gambling. Start winning. This is where the rubber meets the road, guys. You choose which side of the table to sit on. Sit with the gamblers or develop the skills to sit on the house side of the table. Casinos do pretty well. And the reason they do is they only play games that have an edge. And yes, they pay the gamblers, and they give them the cocktails and the tickets to the buffet, and they're still profitable. The other one is Trapped in Trader Groundhog Day. That was me, working hard, tuning, tweaking, waking up in the same place. And everybody who contributes in Trader Lab, thank you for making it the terrific community it is, especially since there's no cost for it. And Ned, thanks for curating this and keeping it organized. There's a glossary. There's a document section. The 60 PDFs of structured trades that I share, you must reverse engineer them. Grid sheets on where the open is and what probabilities initially exist, how you navigate it. A glossary of terms, audio on understanding mental obstacles, and a lot more. I also often get requests for real-time narration. I don't have much time for that unless, we get into it here in this. But there are streams that are in there. They're up to 4 or 5 hours long of real-time narration. If you can stomach it, it's available. And there's a lot of information. And it's not about me. It's all about you. So if you're interested in Trader Lab, use the link in the bottom of YouTube. All you got to do is confirm your Discord email to make sure you're not spam. Wow, that's a good one. I bet you that's never been in one of these streams. Hope you guys enjoyed this. I'm going to listen to that again because that's unique. And I look forward to seeing you on Monday. Trade safe. And if you don't have an edge, visit the Trader Lab. Please give a like on the way out. Appreciate you visiting the Trader Lab today.